Welcome to City Love University. If you're new to this channel, you are cool, you are unstoppable, you are strong, you're making a good decision. This channel is going to give you information, it's going to give you value primarily on the foreign exchange market. We know what it is, how to navigate through it. I'm going to provide strategies, I'm going to break down so much. Always stay tuned, like, follow, subscribe, share. Click the bell, get the information, get the accurate, valuable information, and we're going to tune in. So today's video is going to be about SRTs, support, resistant, trend line. What are SRTs? How do we identify them? What are we looking for? So in depth into that. Now, I do want you to correlate certain terminology. So support and resistance, right? You're often going to hear about support and resistance. Other educators, other trainers, just different forms of information where you're getting it from may use different terminology, such as supply and demand zones, such as liquidity zones, such as rejection zones. What's often common? Yeah, I think that's it for now. But it's all the same thing. It's all support and resistance. Everybody trades literally from one zone to the next. That's how the market moves. It moves from zone to zone. Now, when you think of zones, I want you to think of streets, think of blocks. One block to the next, one block to the next, one block to the next. So if the market is moving from block to block to block, every time it gets to the corner, so to speak, so the market is going to reach the end of the block and then it has to make a decision. Is it going to cross the street? Or is it going to go back down the block it just came from? And that's normally what takes place at a zone. It's either going to reject the zone, meaning going back in the opposite direction, or it's going to break and close above the zone and proceed. So I'm gonna draw it up on a whiteboard so you just get a little bit of understanding, and then I'm gonna go to the charts and we're gonna really break it down on what is support, resistance, and trend lines. Things you must know. Support is your floor. Literally, the floor that you walk on is synonymous to support. Support is your floor. So when the market, it does this, it bounces up and down. It just looks like a mess, so to speak. But there's actually intricate details and intricate science within the market. So one of the understandings you need to understand is support is the floor. Now, for it to be established as support, the market has to touch a coordination twice. And it's never going to be a specific one line coordination. It's going to be a zone. So the same way, like I said, we got to cross the street, that area of space where the concrete meets the blacktop, that blacktop will be the zone, that entire area. So support is never one line. Support is always an area. So that's something you want to know. Support and resistance is always an area. It's always a body of space. So let's say this is the accurate market. It came down here and it touched. It came back here and it's touching. It established 2 points of contact. By establishing 2 points of contact, this is a support. So what do we know so far? Support zones, resistance zones, trendline zones, they are areas of rejection. They're never going to be a specific coordination. That's one thing I want you to know, understand. It's never just going to be one line or one dotted line. So what else do we know so far? We know that they're rejection zones, and we also know to establish a support, a resistance, or trend line, to establish, it needs 2 points of contact. 2 points of contact. So resistance is basically the opposite of support. If support is the floor, resistance is the ceiling. Resistance is definitely the ceiling. So the same way the market is going to move up, it's going to reach a point, it's going to drop down, and if it comes back up to that point, let's say it looks like that, this is an area of rejection. It rejected it once, it rejected it twice. This is an area of rejection. Now the difference between support and resistance, support will be down here, and resistance would be there. It's basically the same thing. The terminologies differ for the simple fact, one is the area of rejection on the upside, one is the area of rejection on the downside. So we know what support is, we know what resistance is. I'm gonna get into trend lines. Now, trend lines, some people don't use trend lines, some people don't believe in trend lines. I mean, to each his own, but we're gonna define what a trend line is. It's very simple. It's a trend line. So we know there are areas of rejection. So if I have an uptrend, what is an uptrend? And we know from the video is when the market continues to create higher highs. So it creates a high, it pulls back, creates a higher high, pulls back. This is the uptrend. It's creating higher highs. So a trend line is synonymous to a rejection zone. No, a trend line is a rejection zone catering to the trend. So it's going to be diagonal because trends are either up or down. So we see how this trend is going up. Now I'm going to show you the rejection zone. This is the rejection zone, like that. So if we was to draw a line, this is how you get your trend line. There's an area of rejection in here. And the market is rejecting it every time. And so on and so forth. So what is a trend line? A trend line is a diagonal rejection zone that is established after two contacts, 2 points. You can now draw your trend line with expectation that it's going to reach this area or zone again and drop. This area or zone again, then drop. All right, so what is a trend line? It's an area of rejection diagonally catering to its trend. It's an area of rejection diagonally catering to its trend. This is just some examples on the whiteboard. We're gonna go to the computer right now. We're gonna look at it in real time. We're gonna look at it we're gonna look at it what we're familiar with. We're familiar with the computer, we're familiar with the MT4. So let's go to the charts. And I'm also gonna show you the simplest way to identify a support, resistance, or a trend line. All right, so let's go over the SRTs. We're on a chart. We're on a fresh live chart. SRTs, to establish an SRT, it has to have 2 points of rejection. So let's go over what a rejection zone is. It's merely when the market rejects an area. So here I am. Right here, good example. It shot up and came right back down. It rejected that area. Now, let's just draw a line right there, and look what happened. It rejected the area again. So it rejected it once here, it rejected it again here. It's safe to say that this is a good resistance. It's a good resistance. It's showing you came here, dropped, came here, and dropped again. Now, we understand that one, it needs 2 points of contact, which we see. Now, the next thing we need to understand that it's just not a simple coordination. It's an area. So let me just put it in like that. It's an area. Let me stretch this out a little. All right, just like that. This area is the zone. So we could just always utilize this area as a zone, no matter what the market does. When it comes back to this area, something will take place, some form of rejection. Reject, reject, came up. Now, this is a transition from where it becomes the resistance to the support. It bounces off of it. You see how it hesitates, it holds this area. But overall, it goes back from here, it goes from the support to resistance. It literally just switches spots. As we can see, it came to that area, it dropped again. Breaks that area, bounces off of it. So the area has some significance. Now, what you're gonna learn is rejection zones. They have different level of strength. The higher the time frame you utilize or you draw your rejection zones on, the stronger that zone is. So here I am, I'm on EU 30-minute. So this rejection zone does have some type of strength, as we can see, but it's not the strongest. It's not as strong as a 4-hour daily or monthly. It's not as strong as that. But the simplicities of this is we're able to identify right here a resistance by how 2 points of contact, which we see. After the 2 points of contact, we know this area is a rejection zone. So it's going to be the same way. If we see 2 points of contact for a support, look, it bounced off right here, right? Look straight across, it bounced off right here. This is an area of rejection. So if I was to do the same thing, and this is an area of rejection. Support, support. It trade places. Now it becomes the ceiling. Bounce, bounce. It's an area of rejection. Let me just extend it real quick. And let's just see how it continues to reject. Rejection. Market drops. Look, switches positions. Floor, floor. Rejection again. And even right here, as we're looking, there's going to be more support, more resistance, more zones. Look, this is a floor. We see it. It's clear in our face. This is a ceiling. It's clear in our face. Bounce, floor to ceiling, floor to ceiling, floor to ceiling. Now that we understand support and resistance, floor to ceiling, we can actually see how the market bounces off and establish these points of contact to create, you know what I mean, these zones. We can see that. I want to go over trend line. What is a trend line? This is also a rejection zone. Now it rides the trend. So as we can see, let me just zoom in right here. This is an uptrend, clear as day. It's creating higher highs. The market's creating higher high, so it's an uptrend. Now let's just look. This was a high, then the next high created was right here. Let's just draw a line that extends from this high to the second point of contact. This is the first point. This is the second point in that area. Let me just make sure it's an area. In this area, right? This entire area will be considered your trend line or your rejection zone. And as we can see, as the market pushed up, it bounced off that area. It pushed up, it bounced off that area. So this is a good example of a trend line or rejection zone. Now, let's just show you again. Even right here, what do we see? It put the markets just pushing down. It's going to create a low, continue to create lower lows. Now, if I was to draw it from this point of contact to this point of contact, let's see what we get. A zone. We're going to get a zone, a zone, a zone. And as we can see, this is a trend line. It's a rejection zone. The market came in this area, rejected. In this area, rejected. This right here is a good transition, downtrend into some form of consolidation, into an uptrend. And that's really how the market moves. That's how the market moves. It moves from zone to zone. So your ability to identify zones is literally gonna propel your trading career. The more repetitions, the more practice you put in identifying zones, just making it make sense to you, will propel your Forex career. It will literally, you understand it. You understand the simplicities of this. Of course, there's strategies and techniques and indicators and tools that people use to enhance this zone identification. But in a nutshell, that's what the market is. Identifying the zone, knowing when it's going to reject, and knowing when, well, you're never going to 100% for sure know. You're never going to just know. But you're going to have good inclinations with good supporting details of why it should go this way. So now let's go into the smoothest way I can teach you how to identify a rejection zone. So it's simple sauce, but it would definitely change the game. I use this method all the time. You want to go in here, right? If you're in a trading view, it's going to look like this, MT4, harmonic scan, or whatever you choose. Whatever you want to go from your candlesticks to your line chart. Now, when it's on your line chart, it does cancel out certain levels of noise, but it gives you sharp rejections. You can clearly see it rejected right here, right? So let's just put a little, it rejected right here, just off that little V shape. Now let's stretch this out. We're gonna stretch it out. Now look at this, just this rejection. It rejected right here. So just these 2 points, this is considered a good support. Now let's just see how well the market reacted to it in the past. It held, bounced, put up a little fight, shot up, bounce, bounce, bounce. Now we can see the transition from the floor to the ceiling. It held. You can always just see the blatant reaction off this one zone, off that one little V shape. Reaction right there. It goes up. All right, we at current time. Just off that one little V shape, you'll be able to see that much. So let me just throw that out and let's try it again anywhere. So here I am. I'm gonna throw some lines on there. Throw a line on every point that I see, right? Line, 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 line. These are easy ways to identify a zone. Now let's just zoom out from just that alone. Just that alone. You see how this line that I drew right here off this point also correlates with this point. This point. So clearly it rejected here, it rejected here, it rejected there, broke above, bounced off of it. It's a good zone. Now look at this. Little point right here correlates with this. So the easiest way to identify zones is to go to your line chart and go to the sharpest point zone right here. Now watch me draw a line right here. I bet you it match up with one of them other lines that we drew. Well, we ain't get that high yet. As we can see, we do understand that even though I'm drawing a line, it's really a zone. So the same way it bounced off this, it bounced right here. Same exact way. Now if we was to go anywhere on a chart, you will see the same consistent rejection, one way or another, whether it was up or down. So now we're gonna get into some fun facts about support, resistance. All right, let's go over some fun facts. Fun facts. One fun fact that I want you to know is a support or resistance, they're interchangeable roles. It's really the rejection zone. Now, I'm going to show you how it's going to go from support to resistance and vice versa. The same zone will hold both titles depending on where you're at in the market. So for instance, this zone right here, we could clearly see how it plays as a support. It's the floor, then it's broken, and now it plays as the ceiling. So fun fact is, rejection zones has interchangeable titles. support and resistance. Fact number 2, the completion of an impulse always creates a support or resistance, always creates a rejection zone, which is obvious. The completion of an impulse is, all an impulse is a strong move upward or downward. So this right here is a beautiful example. Strong move up. Let me just mark you right here. Strong move up, that's a zone. Strong move down, that's a zone. It's the completion of this impulse downwards, and it's the completion of this impulse upward. So this right here is a zone. We'll create a zone. As we can see, this created a floor right here. As we can see, this impulse created a ceiling, which later on turned to be a floor. So one more fun fact. And fun fact number 3. At the end of a trend, once that trend line is broken, it should go into consolidation, preparing for a trend shift. So let me just draw, let's say, just show you what that looks like. What I'm looking for. Right here. So we clearly see this is a downtrend. I draw my line. Now, it's a downtrend. Why? Because the market is making lower lows, lower lows, lower lows. The market makes a lower low right here, then it fails to make another lower low. So it never got lower than this point right here. It failed to make another lower low. So what we have, a sideways market is forming now. Sideways market, as we know, is a ranging market, is a consolidated market where the market is not making higher highs or lower lows. It's just bouncing sideways. So that's your 3 fun facts. I appreciate you for popping now. I appreciate you for taking your education serious. I appreciate you for saying, wow, I learned something. Let me share this with somebody I know that will find this information valuable. I appreciate you 200%. City Love University. Like, follow, subscribe.